Now speaking, Mao, Investor Relations. Good morning, everyone. Today, we will be discussing FTA's quarterly earnings and providing an update on our performance. Please note that our discussion will contain forward-looking statements, and a general discussion of risk factors can be found in our SEC filings. Joining us today are Mr. Hui Zhang, our founder, chairman, and CEO, and Mr. Simon Cai, our CFO. We will begin with prepared remarks and conclude with a Q&A session. Now speaking, Hui Zhang, founder and chief executive officer. Good afternoon, everyone. Thank you for joining our second quarter 2023 earnings call. We are pleased to report that our efforts in the long-haul full truckload business have resulted in solid market penetration and revenue growth. Our focus on better, faster, and more economical shipping has helped enterprises reduce logistic costs and improve efficiency. We have also made significant advancements in broadening our user base through product upgrades and effective operations. As a result, we achieved several new milestones in the second quarter. Our professional shipper users and direct shippers both experienced stellar growth, with the average shipper MAU reaching a historical high of 2 million, a 30.5% YoY increase. We rolled out new product functions, improving the shipper's experience and driving the number of field orders to 40.2 million, a 44.5% YoY increase. Our top and bottom lines also saw strong growth, with revenue increasing by 23.5% YoY to 2,062 million Chinese yuan and non-GAAP adjusted net income increasing by 170.8% YoY to 722.7 million Chinese yuan. Looking ahead, we believe our strategic position as the leading one-stop freight platform, empowered by innovative technologies, will continue to create value for our users and the industry. We remain committed to our user-oriented value proposition and will optimize our services while investing in technology to improve operational efficiency. We will also seek growth opportunities that align with our business model and focus on acquiring and retaining users. Thank you, and I will now hand over to our CFO, Simon, to discuss our operational progress and financial results. Now speaking, Simon Cai, Chief Financial Officer. In Q2 2023, we achieved a year-over-year growth in fulfilled orders of 44.5%, with no sign of a slowdown in order volume despite challenges from extreme weather. Our average daily order volume reached a historical high due to improved user scale and activities, as well as enhanced matching efficiency. The recovery from the pandemic and industry changes have led to more users meeting their shipping needs through online platforms. We expanded our market share and saw a 10 percentage point increase in average fulfillment rate year over year. Our user base continues to grow, with the average shipper exceeding 2 million for the first time, driven by both member and non-member shippers. We also saw an increase in active truckers fulfilling orders through our platform. We have made strides in addressing low-price shipments and maintaining fair transactions through the use of big data and algorithms. Our revenue from online transaction services increased by 59.6% to 555.2 million Chinese yuan, driven by an increase in fulfilled orders and commission per transaction. Our total net revenues in Q2 2023 were 2,062 million Chinese yuan, representing a 23.5% increase year over year. Our income from operations was 333.8 million Chinese yuan, compared to a loss in the same period last year. Net income in the quarter was 609 million Chinese yuan, compared to 12.7 million Chinese yuan in the same period last year. Looking ahead, we expect our total revenue for Q3 to be between 2.16 billion Chinese yuan and 2.2 billion Chinese yuan, representing a year-over-year growth rate of approximately 19.2% to 21.6%. We have also been actively repurchasing shares to reward our shareholders. Thank you, and now we will open the call to questions. Goldman Sachs analyst Ronald Kung inquired, "Can you explain the reasons behind the strong fulfillment order growth of 44.5% and provide insight into how we should anticipate order growth in the third quarter?" Simon Cai replied, "We have experienced substantial year-over-year and quarter-over-quarter growth in our freight volume in the second quarter. This growth can be attributed to two main factors. Firstly, we have enhanced our transportation supply, resulting in increased order volume. Secondly, we have expanded our user base through targeted promotional campaigns and have seen a significant increase in order volume as a result. Additionally, we have focused on improving our product experience, which has led to increased activity and shipping frequency among our shippers. Looking ahead, we maintain an optimistic outlook for the growth in order volume, despite potential weather-related challenges. We are confident that our ongoing enhancements in user operations and services will continue to improve our market share and sustain our position as a market leader." Spokesperson Eddie Wang inquired, "What are the main driving factors behind the significant year-over-year and quarter-over-quarter growth in the fulfillment rate, and what is the company's expectation for the future trend in fulfillment?" Simon Cai replied, "The improvement in our fulfillment rate is primarily due to the enhancement of our transportation capacity. We have addressed the shortage of truckers and implemented operational strategies, such as the trucker rating system, to increase engagement and stickiness of high-quality truckers. This has resulted in a comprehensive recovery in matching efficiency. In the second quarter, we saw a significant increase in daily active truckers seeking orders, reaching over 1 million. This provides our platform with ample quality carrier capacity. Additionally, we have been optimizing our shipper composition by attracting a substantial number of high-quality direct shippers to our platform. The majority of our approximately 2 million shipper MAUs are low and medium frequency members and non-member shippers, with an average fulfillment rate exceeding 50% in the second quarter. These direct shippers have an inherent tendency toward high fulfillment rates, contributing to the overall improvement. Looking ahead, we anticipate a gradual increase in fulfillment rates, primarily driven by the growth of direct shippers. While we may face challenges from extreme weather conditions in the third quarter, such as high temperatures and heavy rainfall, we are committed to optimizing our operational strategies, managing transportation capacity effectively, and providing incentives and support to high-quality truckers. Our focus remains on enhancing user-oriented products and services to increase user satisfaction and engagement. China Renaissance Securities analyst Charlie Chen inquired, "Can you provide an update on shipper membership growth in Q2 and the main reasons for this growth? How do you expect member users and membership fee revenue to grow in the future?" Simon Kai replied, "Our shipper membership mechanism has been successful in enhancing user stickiness and engagement, attracting more truckers and driving growth in user members and order volume. We have seen high retention rates among our existing shipper members, surpassing 80% this year. Our strategy focuses on optimizing user experience and providing value-added services to incentivize new shipper users to become members. We anticipate a single-digit year-over-year increase in membership fee revenue for this year, with room for improvement in membership conversion rates. We also expect China's extensive community of small and medium-sized enterprises to contribute to our potential user pool and further increase the number of shipper members." Citi analyst Brian Gong inquired, "Could you please elaborate on the main drivers behind the improvement in our gross margin for the second quarter?" Simon Kai replied, "The year-over-year improvement in our gross margin is driven by the optimization of our revenue structure. The increasing contribution from commission-based and value-add services, which have higher gross margins, is driving the overall improvement. In the second quarter, excluding the impact of our freight brokerage business, our gross margin increased to 85.6% from 84.4% in the same period last year. On a quarter-over-quarter basis, the change in gross margin is mainly influenced by timing differences in tax rebates, which can cause short-term fluctuations. However, it's important to note that these timing differences do not impact our overall profitability, but rather result in slight variations in the gross margin within a specific time frame." SIC analyst Julu Li inquired, "What is your perspective on the impact of recent announcements by freight platform companies to reduce maximum commission fees or membership fees for businesses?" Simon Kai replied, "Our prudent approach to commission rates has allowed us to maintain a low rate that is far from reaching any limits. The recent regulatory guidelines from authorities like the Ministry of Transportation are actually positive for our platform. These regulations encourage transparency and reasonable commission structures, which we fully support. The recent adjustments to the maximum commission fee have not negatively impacted our platform. While the upper limit for our entrusted shipping model has been lowered by roughly 10%, it still remains significantly higher than our current average commission per order. We will also be introducing various types of products and value-added services for shippers to diversify our revenue streams. By optimizing fee composition and expanding our service offerings, we believe the platform economy will have more opportunities for growth. Our ecosystem and strategic position in the industry give us inherent competitive advantages, and we will continue to strengthen our ecosystem, introduce innovative services, and bring greater value to our users. This approach will drive the development and advancement of the freight transportation industry as a whole." Mao Mao replied, "Thank you for your question. For any further inquiries, please reach out to Full Truck Alliance directly or TPG Investor Relations. Contact information can be found in today's press release. Have a great day."